Randy Smallwood of Wheaton Precious Metals joins us now on the sidelines of the PDAC. Randy, welcome back.
Always a pleasure, Danielle.
It's been a busy year for you.
Yes, it has.
And we're going to talk a little bit about 2017 and most importantly 2018. Some have said that if we don't see a pickup here in gold and silver prices, that we won't see more exploration, more drilling. How do you see it?
Yeah, no, that's one of the challenges, the industry as a whole, and it's not just the precious metal space, but there's been a real underdevelopment on the exploration side. There hasn't been a lot of support for the junior companies, and we're still suffering from that. We're starting to see commodity prices in lead, zinc prices are up, copper prices are doing okay, and we're seeing some strength in gold. Silver seems to be lagging a bit. It always does. It always takes a while to follow gold and to chase gold. So I think it is shaping up. It kind of reminds me of the early 2000s, 2000 to 2005. Yeah. That's what it feels like, that type of a period.
But it's interesting. We're coming to these conferences. I know you and I have been at the last 5 together, and the rooms are packed. But I'm hearing that investor interest just isn't there right now for gold and silver. Do you agree?
Yes. Yeah. No. It's if you sit and look at how the equities, how the mining company precious metal equities are being valued, there's no doubt that we're struggling right now from a valuation perspective. We're not getting anywhere near the respect that we have in the past and that I think we deserve. But it's a matter of delivering, and we just have to continue to work towards delivering, and it'll eventually come.
It's also a matter of we need a price rally here, right, or something for people to get excited beyond 1,300, gold, right?
That's correct. Yes. No, there's no doubt. And the vector's going in the right direction, and it always does. It starts off like this. We do see good strength. We're comfortably over $1,300 gold now, and a year from now we'll be probably comfortable over $1,400.
And Randy, what's going to be your focus in 2018 here?
Well, our whole focus has never changed, really. It's continue to look for accretive acquisitions. We've got plenty of capacity in the balance sheet. We had a very busy 2017 from the sense of out looking at opportunities. We only closed one, Kitco Copper, but there's a few that we're still active on from 2017 going forward. Our objective is to put money back into the ground. We don't want to build up, and so it's a matter of trying to just continue to grow our company, looking for high quality assets.
And when you're looking for these partners, I know we spoke about this in the past, but what's some top criteria for you here? Well,
it all comes down to the projects, the quality of the projects themselves. What we really put a lot of focus on, we're a very technically driven company. I'm a geological engineer by background and come from the mining space. We are really driven on operating margins. The assets themselves have to have healthy operating margins both before and after a stream is put in place. And so we want people change, but the assets themselves don't. And so that's really what we have to focus on, is how good are the assets themselves? How good is the project itself? Does it have good margins? Because not only will those mines continue to operate through low commodity price cycles, they're also the first place that our partners reinvest back into. And you can see that in terms of the amount of reinvestment going back into all of our existing partnerships and our existing assets. It's very promising.
So Randy, as we've just begun PDAC 2018, but what feeling do you think you're going to walk away with here? Does it feel good to you?
It feels like we're building a foundation. It feels like we're creating some strength. We're definitely at a better price than we were last year, the year before, even the year before that. So we're starting to see a slow build-up. It feels to me the same as it did when we started our company back in 2004. Where most of the opportunities that we're looking at are companies that are looking to invest back into the ground. It's a lot different. 2 years ago, most of the companies we're talking to, they were looking for us to help pay off their debt. That's done. And now it's a matter of, okay, how can we start investing back into the ground? So there is an undercurrent of starting to build going forward on the development side. We just haven't seen people flick the switch yet.
So. Randy Smallwood, thank you so much for your thoughts.
Always a pleasure.
And thank you for watching. We'll have much more for you on Kitco.com.